Welcome back, everybody. Mainstream banks are coming around to crypto, but the pivot isn't enough to keep them from having their employees leave for faster and greener pastures. Kate Rooney is outside the New York Stock Exchange with details on this crypto brain drain Wall Street's experiencing. Kate?
Hey, Kelly, that's right. Some of the big bulge bracket names have been hiring, and they're beefing up their cryptocurrency team so far. We've seen that lately. They argue that they've got the scale, they've got the impact, but the startups are also trying to compete for some of that talent. And people that have left Wall Street to go to some of these faster moving startups say they're looking for that fast moving pace. They're looking for a slightly different culture. And they say there's potentially more upside at a startup at this point. JP Morgan, Morgan Stanley, Goldman Sachs are all among the banks with dedicated crypto teams. Data from LinkedIn shows the pace of crypto hiring at financial firms quadrupled from 2015 to 2021 and jumped 40% roughly in the first half of last year. I spoke to Omar Farouk. He's the CEO of Onyx. That's JP Morgan's blockchain group. He tells me operating within a Wall Street bank often means moving slower, but the upside of having JP Morgan's weight behind a project makes up for that.
I think sometimes the upsides of being an institution of our scale and size and sort of operating mechanic is way more important than whatever the downsides might be by virtue of, having to look at all the sort of regulation or the controls that exist.
Other folks I've talked to have found the pace of innovation within a bank can also be frustrating. Justin Schmidt is the former head of digital asset markets at Goldman Sachs. He's now head of strategy at Talos. He tells me he's learned a lot from being a, quote, cog in the machine at a bank. And while he walked away from that big salary and bonus, he says there's also career risk in staying.
Risk is a sort of multidimensional thing. So inherently, you're taking brand risk, right? Goldman is one of the storied institutions of Wall Street. And I think you also take a risk by staying at someplace that is more traditional because, and I very firmly believe this is a generational change, and there's a generational opportunity here in what's happening, both from an infrastructure perspective, from new assets that are being created, and even how all these things interact.
And Kelly, the Wall Street banks are competing with startups, but you've also got big tech now competing for talent. So competition really coming from everywhere. Back to you.
Yeah, and it's shaking up the plans and investments people are making as well. Like, for instance, do you need to have an MBA, Ivy League education?
It's interesting. We also spoke to MC Ladder. She's a former managing director at BlackRock. She's got an MBA from Harvard, and she said it's really not a prerequisite when it comes to some of these crypto startups. She said some of the smartest people at the firm that they've hired at Uniswap, where she now works, she says they're self-taught, they're computer scientists, and in some cases, they're crypto influencers that she's met on Twitter. So really some unconventional hiring. You don't need the Ivy League education at this point or an MBA. It's really a new type of resume that they're looking at.
Computer science PhD doesn't hurt. That's some of the people I know. That's a little bit different story, though. Kate, great stuff. Thank you so much. We appreciate it. Our Kate Rooney in downtown Manhattan.
Shepard Smith here. Thanks for watching CNBC on YouTube.